My name's Brad Ladisaw with SNL Capital Group, and that last 15 seconds, waiting for the clock to turn, took the longest.
The longest 15 seconds.
And I know when we were texting this morning, I was like, we going shirt and tie? We're going to go suited and booted? And you're like, I'll follow your lead.
That's right.
I don't know how you knew I was throwing green on, but this
Great minds, I think. Yeah.
100%. So happy to have you here.
Yeah, thanks for having me. I appreciate it.
Zach, would you mind introducing yourself and the firm you're with?
So Zach Dubin, Bank of America. I'm on the commercial banking side. So the focus is owner-user financing. Business owners buying commercial real estate.
Nice. And we initially met, I think, on LinkedIn.
Yeah.
A few years back.
So I think my initial LinkedIn strategy was just add every single person that LinkedIn suggested to me because I'm, thought growing my network. And I was telling him earlier that right off the bat, I'm seeing Brad post out some good juicy posts. It's like surfing, coffee, family, just like extremely authentic, not afraid to kind of say what's on the mind. And I'm like, I like this guy. And I think that's how we connected and started talking.
Yeah, we exchanged some messages, and then I kept trying to call Zach. I know you're busy. I was calling, and then you picked up once, and you're like, I don't mean to be rude, but is this urgent? I was like, no, just calling to touch base. You're like, okay, good, because I'm in Europe right now. I was like, why the fuck you answering your call? Your wife's gonna kill you. Hang up the phone.
I remember that.
No, but I think that just speaks to you. And if you have like a client or someone potentially reaching out, you're gonna take the call.
Yeah.
And so, how long have you been at B of A?
So I've been at B of A for 7 years. I've been in the financial space for roughly 12, 13. Started at JP Morgan first.
Yep.
I was on the private banking side there, focused on just like the wealth of the CEO, and now I'm focused on more of the business aspect, growing that, and then working with wealth partners.
And then you start there, and I don't know how the mic's gonna be. I think we should be good there.
Is that better?
I have no idea. So, and that's how you know these are unscripted. And you started. You said before B of A, who were you with? You JP?
JP Morgan.
And you started there right out of school?
Right out of school.
Where'd you go to school?
Cal State Long Beach. Local, born and raised, Cal State, and then stay there for college.
And then when you were in school, did you go to school for finance, or what were you there for?
Yeah, finance degree. I did internships at the major wirehouses. So I was at UBS, Morgan Stanley, Fidelity Bank Corp. And so that was the initial path, thinking more of the wealth management role.
Yeah.
And then I realized I was just more into the financing side, more getting deals done, and working with the right people, and that I had more passion for it.
And what was your or what gave you the idea you wanted to get into wealth management? Did you have family involved? Or?
So it was funny. My first job out of high school was selling Cutco knives. I don't know if you're familiar, but basically it's the most expensive knife set on planet Earth, and you sell your friends and family. After every meeting, you say, hey, give me 3 names just to do a presentation to, right? And someone I worked with there, her mom worked for Morgan Stanley as an advisor. So after my summer stint selling Cutco knives, by the way, I crushed it.
Imagine where you could be today.
That's right, if I continued, right? But so the next summer, I stayed in touch with one of the girls I worked with, and she goes, hey, I actually did crush it. And she's like, you should work for my mom as an intern. And so I interned there that summer, or it was either during the summer or during the school year. And I watched kind of her day-to-day, what the job was like, how she was making money. And I thought, hey, this is a nice space. Like, I'd love to get into it.
Yeah, and I know the wealth management side of things, that is, I mean, commercial real estate's cutthroat, but wealth management for some of these large shops, it's like sink or swim.
Oh, yeah. Well, I think it's very similar to commercial real estate. I think it's some ridiculous stat, like 90% of people drop out within the first 5 years.
It's like going to a restaurant.
Yeah, exactly. Because there's, in commercial real estate, you have to start finding deals consistently or else you're going to have no money.
Yeah.
And same thing with wealth management. You're paid off your book of business. So those first few years, they might give you like some type of draw, but those first few years are brutal.
Yeah, it's like if you don't have the support, it can be tough, and most don't.
Yeah, exactly.
So it's like you got to have your vision and go for it.
Yeah.
And then so from there you joined B of A. Who brought you over to B of A?
So a colleague that was with me at JP Morgan had gone over and said like, hey, like B of A is offering some of the best products right now. We're beating everyone in the market. Like the top guys here are making a lot of money. And at the time I was on the wealth management side with JP Morgan. And I think both what I'm doing now, like helping people get financing, helping business owners, and then managing wealth, there's a lot of similarities in both. But with wealth management, there's a lot of unknown, right? For me, it was a difficult thing to tell a client like, hey, this is where the market's going. This is where it's not going. This is the best investment.
I know you're losing your ass right now, but trust me.
Yeah, it's not as black and white, and there's a lot of like, it's not a pitch like, hey, this is what it is, black and white, right? It's more of like a vague, let's build out around you, but we really don't know where the market's headed and what's the best investment.
It's a theory.
It's a theory. Yeah. It's all based off theory, and then the goals of the client. You know, so it can be done extremely well, but the conversation around it is just a little bit different. So what I prefer is, hey, I can look at your tax returns and I can build out the best loan product for you and tell you that where you should go, what you should do, what you shouldn't do. Right? It's very black and white. It's not a theory of, hey, what do you think is going to be best for you? It's like, this is best for you. So I realized very quickly, not very quickly, I guess I was there 5-7 years, but I realized
It's a slow burn.
It's a slow burn where I realized, the commercial lending side is going to be something that I'm more interested in.
And I think that's what we've seen over the years. As when we first started our company, a lot of the deals we were doing were in the residential side, 1 to 4 unit properties, fix and flip. A lot of emotion involved working with those real estate agents and brokers and even some of those borrowers. Over the years that we started doing more and more commercial deals, it's the numbers are the numbers.
Yeah.
Here's the numbers. Here's what I think the property's worth. Here's the leverage that you're going to get.
Yeah.
And there's a lot less emotion, I would
100%.
say, on that. I'm sure, especially when you're talking to business owners and some of the types of assets and size of these assets, you're probably working with some sophisticated investors or owners as well, to where they don't want any bullshit.
Yeah.
It's like, Zach, I am calling you because I know you're going to shoot it straight with me. Like, what are you seeing? No,
Exactly.
How does that work when it takes time to build your book and get the referrals, but when you first started at B of A, what was the biggest challenge for you?
I think just because it's a completely different vertical, right? So when you're on the wealth management side, if you have your COIs and your COIs and your repeat business, it's much different. If you have a really good family who's very wealthy and you're working with the dad and the mom, well, they'll probably refer you to the kids when they're doing something.
Yeah.
They'll also probably refer you to all their wealthy friends when they're doing something, right? It's not necessarily the same with business owners. One, because just because you're a business owner doesn't mean you're hanging out with another business owner. Doesn't mean that business owner is in the same vertical that we really like. But it also doesn't mean that business owner has a financing need, right? So the platform of, hey, on the wealth management side, if you're building and doing really good job by clients, you'll probably start getting a lot of referrals just from those clients. So that was something that I recognized right away. I have to build around people in the industry, right? I have to go look for CPAs who are handling business owners. I need to look for private wealth advisors that are strictly working with business owners. I need to go work with loan brokers, commercial real estate brokers. So it was an entirely new space of people that I had to go out and develop relationships with. And it took 12 months to even, get off the ground in terms of like new referral sources, I think, where they started coming consistently.
And then most of your volume are your clients. Are you in California? Are you nationwide? Or I know Bank of America is clearly nationwide, but where are you focusing? Are your clients?
So my main focus is Orange County, LA. But the reality is we'll work anywhere. And not only will we work anywhere as Bank of America, but the people who send me business, they rely on me to get the loan done and to place the deal, right? So often that means it's not through Bank of America. We get deals, I would say, out of the 5 deals we get, 3 or 4, it's going to be a pass from Bank of America. But I'll tell you where to go so you get the best financing, and I'll bring in the partner that I know is going to do a really good job, and we'll see the deal from start to finish, right? With the COIs who know what they're doing, it's the ratio is a little bit better, right? It's like 50% of the deals work out no problem. But the primary focus is here, Southern California mainly. We just did a deal in Louisiana for like $6 million. I just closed a kennel in Chicago for $1 million.
A dog kennel?
Yeah, yeah. So we'll get random deals just through COIs, but the primary focus and the people I'm building relationships with, it's all here in Southern California.
And B of A, they did the dog kennel?
Yeah.
So that always fascinates me because if I got a dog kennel sent to us and we do asset-based bridge, like we might just see that as a land deal. I don't, depending on how it's structured, we might not do it, but I wouldn't expect B of A to be like, oh, yeah, let's rock and roll.
Yeah.
Whereas we'll do an investment commercial building and you may not do an investment commercial. And
exactly.
It's like, I just, when it comes to risk, I always, and we've chatted about this, I say beauty is in the eye of the beholder when it comes to that. Just because I see it as risky.
Yeah.
You guys may not.
Yeah.
And I see some of the stuff you do and I'm like, how did you get to that?
Exactly.
Well, you should see his bank account with that. So there's other mitigating factors involved. So was that dog kennel, was that the most interesting deal you've done? Or
it was the most interesting in terms of like, where did this come from, right? I've certainly never worked with a dog kennel before to get financing done. I do own a dog. Small little Maltipoo, so I can appreciate that, right? We're working on a vet right now in Manhattan Beach to buy, so I have a fondness for animals, for dogs. But yeah, it was a very interesting deal. B of A, we have an extremely aggressive appetite for owner-user deals, and it's interesting. Like you look at, I think a good example is B of A versus Chase. Right? B of A versus JP Morgan. Two of the biggest banks, maybe the two of the most well-known names here in Southern California. If you look at B of A for like apartment lending, multifamily, we don't have a division specifically geared toward that. We'll do a great job on that for a very select client, right? Our private wealth group will put financing together, really good financing, if you're part of a select niche of high affluent clients. But Chase, they have an entire program dedicated to that. For that. It's a well-oiled machine. They do, probably some of the most business here in Southern California in that space. But when you flip it and you look at owner-user commercial real estate where business owners are buying properties, Bank of America is a well-oiled machine. Our pricing is great. Our process is great. We have some of the top producers in California. Whereas Chase, even with their own clients, a lot of deals they'll pass on that we'll do. And even the ones they'll do, the pricing that they offer is so high that a lot of times those clients will come with us even though we don't have a relationship with them. So I think there's ebbs and flows. I think there's different focuses. And I happen to be fortunate to be at a place where this is our focus and this is our strength.
You make a very good point there. I mean, just because you're a large bank doesn't mean you're going to do the same thing the next bank is doing. It's the same thing in the bridge space. Like I feel we have a very competitive bridge product for our commercial deals. But if you're looking for a heavy value add on multifamily with a ton of the CapEx finance, I'll tell you on the first call, we're not the lender for you. And there's plenty of others that will crank it out. But we'll do no appraisal, non-recourse, sub 10 days. They might take 20.
What is attractive?
No, and it's just like what we're comfortable doing. And I think that also speaks to the value mortgage brokers bring to their clients in the commercial debt space, because it's a lot more complex capital stack and underwrite than an SFR here in Costa Mesa. To where if your mortgage broker is only force feeding everything to Chase and only do multifamily, then they get an owner user industrial. And they expect them to do it. Chase drags them out for 35 days trying to make an exception. And then
it
now
doesn't work. It's a horrible
You're like, we
experience.
would have been done already. Type of thing. So it's to the mortgage brokers. You always got to be shaking hands and kissing babies and meeting other lenders and other lenders.
Exactly.
Like go talk shop. And it's a lot of times it's not even talking about deals per se. It's getting to know you. And okay, one, I know he's going to pick up the phone in Europe when he shouldn't. And two, he'll tell my client if he's got a dog shit deal. Might be a little bit more polite than me with the breaking their heart, but they need to hear that. And with a high level of confidence that here's our process, here's what we're going to need, here are your milestones we're going to do while going through the process at B of A, and ideally everything works out.
I think one also like very interesting an interesting piece of this space of like the owner user financing is it often defaults to the business owner's business banker, right? So, like for example, in your space, or even let's simplify, just a residential loan officer. A residential loan officer, their entire job is to do residential loans. And there are some people that are way better than others, have a lot more experience. But even the people on the beginner level who aren't that good, their entire job is just to do loans.
Yeah.
So they're probably okay.
Yeah.
You know, like they have to know a little bit, right? Whereas in business banking, these very complex businesses all of a sudden want to buy a building, it gets defaulted to their business banker. A business banker does the cash management, the fees, the credit cards, the merchant, the payroll. Like there's a lot of things they're focusing on, and most business bankers rarely do commercial real estate financing. So to the client, it's like, oh, I'm a business banker. He'll do the financing. But then the banker's like, oh, this is the first deal I've done all year. What am I doing? Right? So it's very interesting. A lot of the owner user, if you ask like a commercial real estate broker, oh, how are these guys on the financing side, you know, from these big banks that are like business bankers, a lot of times they'll say it's awful, right? You know, so once those guys find people that do this regularly, they get very loyal very quick, just because they've had so many bad experiences.
And most of your new clients come through business bankers?
Most of my new clients come from commercial real estate brokers.
Got it.
Most of the new clients that are onboarded to me come after we get the loan done, right? So commercial real estate broker will be working with a business owner. They're buying a large warehouse, $5-10 million. They need financing. They send them to me. We get it approved. We close the loan, and then they end up bringing over the bank and balances and relationship.
No, it's. I always like to say you don't know who you're going to meet when you're going to meet them.
Yeah.
And it's in our space, any person is a potential referral, especially with you. Anyone that owns a business or is considering opening a business, it's a potential referral. So, do you spend time trying to get direct to business owners, or are you mainly focused on the broker channel?
So,
or if you're bringing, say, I'm going to join your team, green. I'm coming right out of school. What are you telling me to do to try and generate leads for you, of course, to close because I'm green? But how would you set me up?
So I'd say you want to be as efficient with your time as possible, right? And there's the immediate game, right? Because you have to live, you have to survive, you have to start making money now. The immediate path to start generating business is cold calling large business owners that have current debt. The good thing about our space, no matter what's going on in the market, a lot of the loans on the owner-user side are either variable debt or they balloon after like 5-10 years. So it's not like residential real estate where it's like, hey, if someone's locked in for 30 years, they're never going to refinance. A lot of these people are somewhere on the timeline where they need to refinance because the loan's ballooning or it's a variable rate and it's high. So there's always opportunity to call a list strategically, find large business owners and say, hey, we can lower this debt, or we can restructure this debt to improve cash flow, or we can pull cash out to help your business, right? So that would be step one in terms of immediately generating business. But then on the back end, and the long-term goal and long-term play, if you want like a successful business, you have to be building relationships in the community. If you're driving all of your business just by cold calling, you're going to burn out, and also you're going to hit a ceiling. Versus if you can build a network around you where you're constantly getting business, you'll work way less than the cold caller and bring in way more business. So that would be my advice.
And that's the toughest thing. You have to hammer through that wall of making the cold calls, all the rejection, get a few deals closed. But it's just as challenging at times to build that community around you. And I think you've done a great job at that. You mind sharing a little bit about I think you do host a mixer every once in a while? Yeah.
So I try to host a mixer at least once a month. We'll go to somewhere nice that people can enjoy. Just open up the tab.
They're all nice when you're there.
That's right. Yeah. That's right. But
laugh in the background. Got
it. But I think it's easy to break bread over food or drinks, right? And it's easy to grab a drink, talk with people in the space, and I think, like, don't get me wrong. There's a lot of people I do a lot of business with, and we don't necessarily hit it off on a conversation. We don't necessarily have the same values or things, but they do. They're a very good CPA. They're a very good broker. I'm good at what I do, and we can send business back and forth.
It's like a mutual respect.
It's a mutual respect, right? But in an ideal world, at a networking event, a little mix where everyone's grabbing drinks, and you're talking to someone, you're like, this guy's really cool.
Yeah.
And we work in the same space. I think that's like the easiest, most natural progression to build. You know, the second we started, like, and there's also other ways, and I think you do a really good job in this spectrum. The way you put yourself out there on LinkedIn, it's almost unnatural because it's so natural. So many people on LinkedIn, it's almost force feeding LinkedIn to try to create content. They're putting things together that are very robotic, are very, you know, everything is like, hey, here's my new rate. It's just not personal. It just doesn't really give us any insight to who they are. I think you have a very good mix and balance of like, hey, this is who I am. I'm surfing. Let's meet up for coffee. This is also what I do. Oh, here's my kids at a baseball game. Like you become someone that just via online, I kind of knew who you were before we first talked or first met, right? And so I think it's the same thing with mixers. When you meet someone or you see someone online where it's like, hey, this guy, I could vibe with this guy. It's very similar to how I am. I think that's a great way to start building business back and forth. If you like someone, if you can hang out with someone, then it's like, okay, you start talking, like, let's do some more business together.
Yeah, especially the deal sizes you're doing and some of the deal sizes we're looking at. It's not like a little $100,000 allocation.
Yeah.
You're talking about livelihoods.
Yeah, 100%.
On that, to where we tend to not refer business to anyone that we have not met in person before.
Oh, yeah.
Just because there's a lot of smoke and mirrors out there. To your point, I try and be visible on LinkedIn. I can't stand social media, but it works.
Yep.
And the biggest fear I have is, say I see someone that, I think I could relate to them. I meet them in person. It's like, you're a freaking different person.
Yeah.
Like,
yeah. Who are you?
You clearly don't write your own stuff.
Yeah.
And like, this is extreme. Like, you don't even have kids. But
Yeah,
I haven't seen that. But you know what I mean? Like, it's like that is very real. And like, you find out a lot about someone having a beer, having a coffee.
Yeah.
When I first got into the business, Corey, I scheduled a lunch meeting for my very first meeting. It was a horrible lunch meeting.
Yeah.
After this, I don't know if he remembers this. He says, for your first meeting with someone, you never schedule a lunch because you're locked in for like an hour and a half. Coffee, you could get out.
Coffee's quick.
Coffee.
Got to run to my meeting.
Yeah, something came up. Coffee, get up. You could go.
Yeah.
Lunch, you got to wait for the bill.
That's right. That's right.
I'll never forget that.
That's great advice.
I'll never forget that.
Yeah.
But it's true. You need to meet people in person. I think over the years, we've tried a little bit of everything. We used to go to the mixers or the RIAs, and they're kind of good, but they get saturated with either too many lenders or people that aren't transacting or too many service providers. We've had the most fun, but have established great longstanding relationships similar to how we have, where we just host a mixer.
Yeah.
You team up with someone else in the industry. Heck, even if they're a competitor, who cares?
Yeah.
I'm confident in what we do.
Yeah.
We're not going to do every loan. They're not going to do every loan, but we do bridge loans. So I'll team up with someone that does insurance and maybe an investment sales broker.
Yeah.
We all split the cost on a mixer, costs a few $100, and then you invite your networks and just let people talk shop. And I think that's what's been great about yours,
Yeah.
where it's just people that are touching the banking and commercial real estate ecosystems, and they're just having a drink, having an appetizer, and getting to know each other. And then if they want to have a follow-up meeting afterwards, they have the follow-up meeting.
And especially like when you're partnering, you know, going back to like, there's definitely people that I work with that it's based on a mutual respect.
Yeah.
They do very good. I do very good. We send a lot of business back and forth. But when you're like hosting these mixers with people that you just truly enjoy, and then they're bringing people, and then I'm bringing people, typically my people like your people.
Yeah.
Because we like each other.
Yeah.
So it ends up being like a very symbiotic, fun event, right? And I think that's been like these events. I think that's been the biggest takeaway is be very selective about who goes because it's about kind of the the culture and the vibe and like how people feel when they're there and when they leave. Like, do they want to come back? Did they meet a lot of people? Was it really enjoyable? Right? And if you can make it like that, I think you'll start getting more repeat people, and then they'll bring other people that are also good to meet. And so that's kind of what we've been trying to build.
Yeah, and it doesn't need to be a big old blowout party.
Oh,
You're
yeah.
just like in a nice location, like you said, open up the tab and have a few appetizers and just let people do what they want to do.
Yeah,
and
exactly.
meet people. And there's a lot of times I'll take a meeting with someone that I know I will never do a deal with, but they might be my greatest referral source.
Yeah.
Just because they like hanging out with you, but they know you perform. So you have the mutual respect, and then you also have the connection on personality and extracurriculars that you like to do, and that, hey, you're just a real person.
Yeah, exactly.
And it's the tough part, though, is I think anyone new in the industry or even someone that's got 20 years under their belt, sometimes it's tough to just go out of the office and go to a small meetup at the end of the day.
Yeah.
You're just tired.
Yeah.
But you gotta just push through that wall and just go shake a couple hands.
And I also feel like subconsciously is like once you're starting to do a lot of business, you start thinking, where's the value add there? Like, am I going to actually meet someone that's going to really move the needle? You know, I already have my people dialed in. You know, so I think that also goes back to like the people you're networking with, right? Like there are some people I do a lot of business with, but I might be a little bit less inclined to go to their mixer versus someone who I know I'm going to really enjoy it there.
Yeah.
Right. You know, so going back to kind of just building that vibe so it's very enjoyable for everyone. I think it helps even the people who are super busy, already super well established. After a long day, they'll be looking forward to the event, right? They're not going to look at it as some type of
chore.
commitment. Yeah, exactly.
So growing up, you play sports growing up?
Yeah, football, hockey.
Football.
The bruiser sports.
Should have known.
Yeah.
No ballet?
No ballet.
No ballet.
It was either that or football. It was close, yeah.
And then, sorry, clearly unscripted. We're going here. And then do you still play in any leagues or any men's leagues now? Or
No.
did you after high school growing up?
Yeah, I did, yeah. So played in men's leagues up until probably like 30. But these men's leagues, man, it's a bunch of degens. They're out there, beers, missing teeth. Like I have
Just looking to fight.
Oh, I got like 12 stitches here, 6 stitches here. Like it's brutal. Beer league hockey, it just gets out of hand. So I'm like, all right, I'm showing up to work with like cuts and stuff. It's like I gotta chill.
Trying to land a client.
Yeah,
a $20 million deal, and
Yeah.
you look like you just got in a bar fight. And it's
Yeah.
like, I swear I wasn't out at 2 a.m.
Exactly.
wreaking havoc. I play hockey.
Yeah. So it was fun, but I hung it up. Maybe if I can find like a league full of like doctors and entrepreneurs, I'll sign up for that.
They'll probably be worse.
Yeah.
Because you can't tell your client to F off on the phone, so they're going to go in this hockey league and start throwing blows.
Exactly.
And then your family, you got any kids or?
Yeah, so we had our first about a year and a half ago. Yeah,
Boy or girl?
Boy. And it's been like the greatest experience. We have like 1 or 2 days a week where like typically I'm up early going to the gym and going to the office,
Yeah.
but 1 or 2 days a week, my wife who's in medical sales, she'll have an early surgery. So she's out of the door at 5 a.m. So I get to be on daddy duty from like 5 to 8 o'clock before the nanny comes, and we're in the park grabbing breakfast. You know, we got this little breakfast place like right around the block from us. So I'll just throw him in the front seat and we'll just drive over, and just like grab breakfast. So it's awesome. It's been great.
And they say he's 1.5 now?
Yeah.
So he's moving around
He's
now.
moving. He's running. As of like last week, 2 weeks ago, he said nothing. And then all of a sudden one day he woke up and everything we say is like a parrot. It's like dad, mama, bike. It's like, okay, well, that's cool. So it's been great.
So do you think now he's getting to the age where he's starting to building his own personality.
Oh,
Started
yeah.
seeing it.
Oh,
Do you
yeah.
think he takes more after you or his mom?
It's probably a mix.
Would she say the same thing?
She probably says the same thing. Overall, I think he's got the best of both of us. I remember one time...
You are in sales. Yeah.
That's right. That's right. But I do remember specifically, and this probably happened around like 6-7 months, where you could tell he wanted to communicate something, and we didn't know what he was talking about. So he just went, like this. And my wife looked at me and she goes, you didn't get that from me, you know? So we try to give him everything we can, you know, to make sure he's a good kid.
No, and then before you know it, he's going to be talking back and negotiating and making deals.
That's right. He's going to be making deals. No. He's going to be our first intern. So
it goes fast. So enjoy the early days.
Yeah. Well, it was awesome when we went to the baseball game. Like your kid, dude, he was in it, dude. And you could tell he looked up to you like, this is the greatest time hanging out with my dad at the game. That was cool.
Oh, thanks for the invite. I know it was, again, hanging out with people you want. It's I saw your call. I was like, I better take it at 3:33. What are you doing this evening? Making dinner. Your kids in bed.
Yeah.
Well, want to go to a ball game? Let me call my boss.
That's right.
See if we get it cleared. But it was that was a blast. And he had a blast, and it's just fun to get to know people outside of the office. And just little things like that.
Of course. And it's also, I think you can relate, you know, it's like we're in similar stages of life too. Your kids are a little bit older, but we both are raising families, also building things, trying to support. Like, it's cool to have people in similar stages that are doing similar things.
Yeah. Question for you, more back on the business side of things. I mean, I don't want to go too far in the rabbit hole of AI and processes and all of that, but has B of A been pretty receptive to some of the stuff that's going on with AI and giving you guys resources? Or is it more not quite any adoption from the bank level?
No, so B of A is essentially adopting like a co-pilot AI that will integrate with everything.
Wow.
You know, there's a lot of things that are probably still in the works, but we already have access so that we can use it to analyze a document or use it to put together an email or use it to analyze tax returns, right? And it still will come down to kind of human review, but it helps us do a lot of things very quickly that, you know, a year ago we were doing by hand. So it's been great.
And I think that helps break the bank stereotype that Bank of America or Chase or Wells, they're impossible to work with. They're slow.
Yeah.
It's like now you have that pre-screen going on to where you could go back to your clients very early on.
Much quicker than before.
Which I think has got to be fabulous.
Oh, yeah, it's been amazing.
From your team members as well.
AI in general, it's going to be, I think it's going to be a beautiful double-edged sword, right? There's going to be so much good about it. And then there's a lot of things that maybe won't be as good, right? And so I think being able to harness it, master it, but more importantly than ever, I think it's going to be important to build relationships, right? You know, someone was talking to me yesterday about how AI might impact kind of the finance space. And what I truly believe will happen is as it gets more advanced, it will help take away a lot of the clerical work, a lot of the processing work, right? And that's real work to real people. But at the end of the day, people will still decide who they use, right? You know, so if every major bank, major lender, major wealth manager has eliminated these processes to be more streamlined, the consumer still has to choose who do they work with. So if you can still move those relationships to different places, then you still provide tremendous value on top of all the knowledge that you have and everything that you're doing. So I think more than ever, these relationships and knowing people who are good and communities of like-minded people are important, right?
You always got to be shaking hands, meeting people in person, because no one wants to make a call to get an interpretation on their deal and be talking to a bot on that. And it's a slippery slope on that. But like I said, people call you for you.
Yeah.
And your feedback and your read on the market. And I don't think you'll, especially on the investment side and the financing side, I don't think you'll ever replace the human aspect. Some will try.
Yeah.
And I think that's a slippery slope.
And listen, I think that,
I think it creates opportunity for people like you and I that like to be in front of people.
Yeah. And listen, that technology may help us to have those conversations, right? But I think you're spot on where people don't want to talk to AI. We just had like a plumbing issue at the house, or it was either plumbing or it was.
I'm sorry.
Yeah, right. And when it comes to like that stuff, not my strong point. You know, like fixing.
Let me know the amount. Let me know the amount.
Exactly. So I just reached out to the local plumbing company. It was either plumbing or HVAC where this situation happened. But I just pulled Google, called all like the top things that came up. Every single place that I called had one of those AI receptionists. And I stayed on the phone for like a few minutes, like, hey, like I need someone here. I need to talk to someone. And it kept giving me these AI prompts and I hung up.
Yeah.
One company hung up, two companies hung up. So these PE firms bought these small family-owned shops that were doing like—
And then gutted all the
and then gutted everyone and replaced them with like an AI secretary. And on the fourth call that I made, a human answered, someone who hadn't sold yet.
I don't care the price.
Yeah, just come, and I hired him, right? So like you said, like I think there's a lot of people that are gonna, you got to have to be careful about how it's used, because there's a lot of people that aren't gonna want to talk to some AI robot on the other end.
Yeah, and you got platforms popping up that, I mean, you can't replace your personality and your approach, but they can make you more efficient and more streamlined, or maybe help get points of contact for people that you need to get in front of and close and do all that. So I definitely see a need for it. I'm excited for it because it's moving quickly, and I think it's going to be 3 months from now, it's going to be different than it is today.
Yeah, 100%.
And then I'm going to be moderating a panel on September 10th.
The AI. Yeah, I'll be there.
So that's going to be a fun one. We had a planning call the other day, and it's like, it's going to be different in 2.5 months. So it's just going to be like open dialogue with some guys that have been implementing and testing all these different platforms, how to screen some service providers, because you're going to have these new service providers popping up, or these self-proclaimed AI experts. Some of them are. Others just are good at marketing, and they're just leveraging all these.
There's a lot of good marketers out there. Yeah.
Meet them in person. So it's that's going to be a good time. Couple more questions for you, random questions.
And then quickly, just to completely backtrack, but talk about meet them in person and how you present, and then you meet them and it's like it's not this person, and then AI writing for you. I don't know if you've seen this, but I think it's one of the greatest things I've ever seen, is these professional athletes that maybe have never said a complete sentence in an interview for the past 5 or 10 years, who are now posting
on LinkedIn.
LinkedIn. Yeah, these storybooks. And I think that's incredible. I think that's absolutely incredible. I'm like, this doesn't sound like you.
I think I saw Kyle Kuzman.
I've seen a handful. And it's great. I love it. And there's a ghostwriter, and then there's a ghostwriter.
Yeah, right? And I've seen your interviews. I've seen your post games.
Yeah. You've never used that word before.
That's not the post game.
Yeah. I know. But anyway, sorry to cut you off.
Now I lost my train of thought, because my dumbass, I even wrote a comment on one.
Oh, bro, Oh, that's cool. Yeah, that's great. I love that. But then you start seeing like a list of
they're all the same.
Yeah, it's like 10 professional athletes did like the same exact
but that
post.
Consultant's killing it, because
Oh,
he sold them. He sold them.
I know. I love that. I love that.
You got to be you at the end of the day. And if you're not, people will find out real quick.
Oh, yeah.
And I think Corey and I were chatting about this earlier, is people don't want to be sold, especially your more sophisticated investors. And you got to walk a fine line. Hey, you have built a very successful business. Now you're looking to acquire this asset to move your business into. It's got to be a tricky conversation at times when you're advising some of your clients, because some, I would assume, feel like they know it all.
Yeah.
And you can't necessarily come in and say, hey, you're wrong because of X, Y, Z. Like, how do you handle some of those conversations?
Well, listen, if you have those clients that are going to be like, hey, that's wrong when they're wrong, like, those are tough conversations. Like how do you get around that? But I think when you're talking to a client, it's not about, especially on the lending side, it's not about selling them. It's about kind of showing them that you know what you're doing, right? And I think that will be established very quickly in the conversation, based on what you're asking, what you're talking about when they bring up a certain situation, and you already know all about that, right? Just instilling confidence that, like, hey, I'm working with someone who is going to do a good job on this, and then based on my financial situation is going to find the best loan for me, right? So I think it's just easing that fear of the salesman, and Sharing them like, hey, I'm here to help, and I know what I'm doing, and based on your specific needs, we'll find the right product for you.
And it's again, just shooting straight, but I always recommend that borrowers or investors try and ask process-based questions.
Yeah.
Because that is the quickest heat check on if you're being sold or not. Because the people that are really good at what they do, and the reason why I'm sure your clients and your referral sources send you deals to look at is your understanding of the process, your understanding of the asset, and then the debt behind it. And it's, if you say, I don't know to everything, they're probably going to stop calling you. Or if you start making up answers, and then
which is almost worse.
And then the process is completely different, then the credibility is gone.
Yeah, exactly.
So one last question for you. Bucket list trip you could do. Money is not a concern. You and the family, what's a bucket list trip you would like to do?
So it's funny because
And B of A will give you as much time off as you want.
I almost like fantasize about stuff like this, where all of a sudden it's like, hey, I need a new house. Or you know what, let's just travel for a month, right? And so we actually did this when our first kid was born. We did 3 weeks in Costa Rica, had a house basically right on the beach. Another friend and family came. We surfed every day. It was just incredible. But anyways, so I've been thinking about this lately because we're getting ready for our next kid. Hopefully, we're trying. And I'm like, all right, we got to do another 6 spot. So I've been thinking of like doing something like for like 3 weeks in like Vietnam. I forget the exact place, but it's like crystal clear water. You live like a king for like relatively nothing. I'd love to do that, or Bali. Or if like, hey, we decide, the flight's too long, just go over to Mexico.
Yeah.
We have a week planned in Mexico at the Grand Villa something, and it's kind of like our nicer trip of the year. Yeah. And so I don't know. I don't know if I have a dream trip, but I love traveling, and hopefully something good with the next kid.
No, you will.
Yeah.
You will. Right on, Zach. Well, I appreciate you jumping in the hot seat with me today. It's always fun.
Yeah, thank you for having me. I appreciate it.
You'll get some drinks again soon. So,
cool. Awesome. Sounds good.